Greetings, everyone. My name is Clark Frogley. I am with Quantexa. We are excited today to be with you to talk about trade finance risk, AML, and fraud. I am currently the head of financial crime solutions for Quantexa in the Americas. With me is my colleague, Alexon Bell. Alexon, you want to introduce yourself?
Hi, everyone. Good morning, good afternoon, good evening. Alexon Bell. I'm a Chief Product Officer here at Quantexa. I'm also a co-founder. I've been involved in the trade projects, so I'd be delighted to talk through and show you some of the case studies today, which have been anonymized from real life projects that we have done. Thank you, Clark.
Great, thank you. So we're excited to go through this presentation with you today. Obviously, within trade, a tremendous amount of challenges and risks for the businesses. What we'd really like to talk today is, from our perspective, is one, just make sure we understand what does it mean to bring context to trade finance. So we're going to talk a little bit about, from our perspective, how we approach this, what we mean by context, and then how does context really help organizations manage their trade risk more effectively. And today, the lack of transparency, the challenges in understanding not just our customers, but our counterparties, both across AML and fraud. So we're going to kind of set the stage a little bit. We'll talk through kind of from our perspective, define our approach, and then we're going to get right into some real life case studies that Alexon had referred to. We'll talk a little bit about AML and fraud as well. And then hopefully kind of sum that up at the end and bring to you some new insights on how we can really manage the challenges around trade finance and risk. Okay. Alexon, why don't we jump right into some definitions around how Quantexa utilizes context in trade finance.
Thank you, Clark. So the first slides, I think we just wanted to set some scenes and give people an understanding of how we start to assemble bits of information and allow that to be used by either human operators or by automated systems. And when we look at trade finance, right, it's a very interesting domain. There are some that's electronic, a fairly large portion of it is still paper-based, but essentially within those electronic bits of information and those paper documents are some core attributes that are really critical to solve the trade problem. And in this example here, we've got a KYC application form, but it could be a letter of credit, it could be a bill of lading, it could be anything. But essentially this paper document is always, or nearly always, transcribed or created as some form of electronic data. And this middle piece here is that data of your customer in a table within your customer lifecycle management system or CRM platform. And it captures, again, simple information here, but ACB Limited, you know, they were a customer from 2016, telephone numbers, addresses. And in Quantexa, we like to visualize things as networks. And in trade, we think of things like supply chains. So a network view of data sometimes is quite relevant for people to understand how things connect with each other. And if we think about trade, it is the connection between importers and exporters and the broader ownership structure that gives insight into the validity of a relationship. And in this example, it's a very simple pictorial representation of the internal KYC of your customer who has a trade product into a simplified network. So you can see your customer in the middle, their account, Joe Bloggs as the signatory, telephone numbers, etc. What's important is to get a further understanding of your customer and what other information is out there. So at Quantexa, we use a process called entity resolution, but this is a more advanced version of name matching to essentially look for your internal data and match that to an external corporate registry, either domestically or through an aggregated provider like Bureau van Dijk or Dun & Bradstreet. And in this example, we're taking your customer details and we're matching that against an external corporate registry. And as you can see here, some of the attributes that we would use to say that actually your customer is the same record as this one on the corporate registry. So we'll look at things like names and addresses and signatories and emails and telephone numbers, and using those the increased number of matching attributes, we can gain confidence that actually your customer is this corporate registry record. And what we do at Quantexa then is we take this internal view and we supplement that with any missing information from the registry. and we'll update things like the John Smith and the Jane Jones here as directors, some beneficial owners, some additional addresses that weren't captured on your KYC. And this is critical in understanding the kind of fuller relationship that your customer has, and potentially are starting to identify additional risks. What we do with the customer data, we also do with the transactions, and that within trade are the 7 and 4 series contracts, or the 1 and 202 Cov series that acts as the settlements for those contracts. We've got a really simplified Swift message here on the left-hand side, but essentially the same process that we use, entity resolution, to link your customer data to the corporate registry data, we do for the transactions to corporate registries as well. So in this case, you can see the things that we look for. So for example, we might parse out the BIC, understand that it's a Russian country. We'll obviously use the originating name, umbrella company, and then pieces of the addresses. And there are different ways that we can have different permutations of addresses and stuff like this. And we have NLP type engines to help with the parsing and matching of that. But essentially, this will take any party within a Swift message and look to find that matching record on the corporate registry data. What does that mean from a network perspective? Well, essentially, we take this enriched view of your customer with corporate registry data. We overlay the transactions that we have matched. In this example, we see that Acme Limited has sent some goods to Umbrella Corporation, and they have then paid for those goods. And we can see this as a normal Swift transaction at the top here to Acme Limited. But if we can resolve to the corporate registry, we can then build the ownership structure on the counterparty side, which is very interesting. This is a perspective that organizations have not been able to achieve without modern techniques like entity resolution. And then with network generation, we can start to build ownership connections. We can start to overlay watch list matches on here as well. And as you can see in this example here, we have a very interesting set of relationships emerging. So we have from the counterparty side, Umbrella Corporation is owned by Sergei Bogov here, and Sergei is on a watch list. So potentially he is a Russian PEP, and you could be having a 50% ownership breach here of OFAC because of his 62% ownership of Umbrella Corporation. But also the corporate registry providing us information here that Sergei is a 50% ownership of Globocorp, which owns Acme Limited, your customer. So this now becomes a very interesting view because essentially we might have what we call a legal entity U-turn, where money starts from Acme Limited and ends in Acme Limited, but actually it's Sergei that controls it at the top. So money has just moved between his or her companies, and financing trade between companies that you own is quite unusual, because if you think about what trade finance was created for, it was because there was a lack of trust between importer and exporter. So they would pay for the surety of payment percentage points to the bank. If they're your own company or within your own legal hierarchy, you should be confident that your own companies would pay each other. So the fact that we see some finance trade within a corporate hierarchy is quite unusual and significant from both an AML and fraud perspective. And if we step back, what we can see here is that the internal challenge or internal view is quite limited. Using these modern context engines with entities and networks, you get a much broader picture of the counterparties, how they connect with each other, and that gives you a different perspective and further insights into risk. Does this work? Well, yes, right. Here are some results of proof of concepts. And as you can see here, for trade, AML and fraud, they're quite impressive. In this example here, the bank in question had tried to build a trade AML solution before Quantexa, and they told us that using a traditional approach of value and volume and the standard type scenarios, 7,000 alerts would be generated a month. Whereas Quantexa's approach using entities and networks in this wider context only generated 200, which is a significant improvement. Also, out of those 200, 70 went to level 3, so this is just below SAR. So we actually found new risk with this exercise that were not detected by any previous system and incumbent platform within that bank, which is the 100% increase in coverage. What's also important is that it's now live in about 36 countries around the world. So we've had the kind of no objection response from regulators as that platform has gone live. So all the analytics are open and transparent. As you can see here, trade finance fraud. So again, leveraging the same entity and network approach, we managed to find more than $100 million worth of fraud with only 150 alerts to find that. So as you can see here, comparable performance consistent, very accurate, small numbers of alerts, but finding a lot of both AML and fraud issues. One other thing to note is that the platforms that we built for fraud and AML, which are also both live in production now, the banks in question asked us to build these without OCR data. So that's quite critical, because that means that the data that you need to get these results is currently available within a bank. And those are the SWIFT messages, internal KYC, and the corporate data to provide the kind of ownership structures. I'm going to stop there, but and over to you, Clark, as we start to go into the case studies.
Thank you, Alexon. Really, really good introduction. Hopefully that gives everybody a bit better understanding of kind of our approach to how entities and networks can be leveraged specifically in trade. We're going to go into some of these case studies and highlight this a little bit more specifically, just to reinforce some of those things that Alexon just went through. So Alexon, I guess maybe as a first example, and we'll go through some kind of increasingly complex examples, but from just an initial perspective, I know one of the challenges is simply with our customer, right? Customers provide information, but sometimes there's information that may not be disclosed or available that could contain undisclosed risk. Do you have anything, or can you give an example of the kinds of information that might be surfaced using the techniques that you just covered that would be specific in this example?
Yeah, thank you, Clark, and I can. So if we use this one, right, we'll start with a really kind of simple example, but also start to give the audience a bit of a view of the pictorial representation of networks. So it starts here with the customer at the bank. You can see its customer record, its corporate registry record, and they both agree that they are at a particular address. This is an internal account at the bank. And as you can see, this is a trade finance transaction for about $550,000 going to a business registered in the Philippines. Right, so this is just a really normal trade transaction. We're not seeing any settlements, but this gives you a view of some of the things. And again, orange is a debit, green is a credit, so it's leaving this account and it's being credited to this account in the business. So as Clark said, right, we'll start simple. And sometimes actually the risk is not with the counterparty. We'll see a few examples later on of where the risk is with the counterparty, but it's actually with your customer and your records are not kept up to date. So this is a really simple example of where we have used entity resolution and corporate registry data from Bureau van Dijk or Dun & Bradstreet. We've built the legal hierarchy using network analytics, and we've also then added in a watch list. And this example here, as we build up to the global ultimate parent, one of the directors of your customer is actually a politically exposed person in this country. So this means that, and again, this was not known about by the organization in question, but this is a really simple example of where you can use entity resolution and whether or not this was a deliberate or just a mistake of not disclosing this or updating KYC. But this kind of shows you that, you know, sometimes the risk is hidden in your customers, and sometimes that risk is hidden and layered through the ownership structure of organizations.
Great, thank you. You know, I guess I would just reiterate, I mentioned this earlier, but the case studies that we're going to go through, these are anonymized, real examples of things that have been surfaced through different engagements with real customers. So rather than just, you know, theoretical, these are the kinds of things that can actually be detected. You know, Alexon, as I think through this, you know, in reality, right, only about 15% of trade is actually financed. The other 85% is still done through normal payments. So how do we use these kind of techniques to really bridge the gap and blend a holistic identification across risks, both in the financed space as well as the non-financed deals, in order to help institutions really understand, you know, the whole risk that could potentially be presented in the limited data that they might have access to?
Yeah, thank you, Clark. So let's step up and start to blend that information of finance trade and open account trade together and see what happens. So in this example here, little bit larger scale. So again, it starts with the customer in a particular country. You can see the customer record, the corporate registry. They've got a couple of accounts actually at the bank. They've got a trade finance account. And as you can see here, they're doing some fairly substantial amounts of trade finance, 700,000, 550,000. And they've got counterparties all over the world: Saudi Arabia, Senegal, Nigeria, Saudi Arabia. And this is all financed. However, when we start to look at how those contracts are paid, we start to blend in normal SWIFT settlements like 103 and 202 cover messages, we can start to see some different pictures. Also behind here, right, if we look at this, right, there's a couple of million in financing over here. When we look at the address, right, somewhere up here is a small office. So clearly it's not the manufacturing hub for this business, but maybe it is the head office or operation center. But again, one of the things that we would look at is to look at geography as well as in context of the activity. But this does look like a kind of strange address to be running, an operation that's financing a couple of million. And when we see the actual volumes of the other messages, right, this office doesn't quite look like it's in the right location for the size of this business. So when we start to blend in the normal transactions, we see a very interesting pattern here. From this Saudi Arabian entity, $700,000 worth of trade finance is going out of the country, but 88 million is coming in on just normal payments. And if you can see, right, 50% is finance and the rest is open account. That's kind of a good match. If we then look at another set of transactions, we've got $1 million payment coming out to a business in a free trade zone in Nigeria, right? That's always very interesting. And $41 million in normal payments coming out. So when Quantexa looks at these, right, we would consider these to be kind of U-turn transactions or legal entity U-turns, because the money is coming back to the company that sent it, but also it's a combination of trade finance and normal transactions. Thank you, Clark.
Yeah, great example. Great example. It's interesting, right? As I think through this, both in my experience in law enforcement and then working in several financial institutions, investigating these kinds of things. One of the challenges that we always had, and the things that we were interested in, is that the way that people behave and the way that they conduct this type of activity is very collusive in nature, right? It's the inability, right, to understand how these parties are connected, how they're either sending money or communicating or setting up these types of operations, that is the golden nugget that as an analyst or an investigator that you're looking for. And if you can uncover those connections and have significant information that helps you confirm the types of examples you were just referring to, that's what really helps give an institution the ability to better understand its risk and whether to reject a deal or to support a deal and continue with the underwriting process. And so just understanding that this is an extremely collusive process, and the way that, particularly when you get organized criminal activity involved in these things, makes it extremely important to be able to connect those pieces together. Can you just really highlight how we're leveraging the entities and networks to really get in and uncover the collusive nature between the various parties that might be involved?
Yeah, thank you, Clark. So I think this is probably the most complex case study that we'll go through, but it touches upon all of those aspects that you talked about. It is a professional money laundering network, right? We're pretty sure of that. It does show some of those kind of collusive elements and Phoenix operations, but it also just reiterates the lengths that criminals will go to move money out of particular countries. So the background of this is it starts with a business in Africa. It's got a couple of directors over here, Director B and Director A, and it is a customer of the bank, right? So it starts as a customer of the bank, and they have relationships where they are trading with businesses in South America, in Middle East, and in Asia. And they're importing and they're exporting, again, also to kind of Southern European countries and stuff like this. So it just looks like a normal kind of import-export business. But however, the bank in question didn't like some of the activity of this particular business, Business A, and decided to offboard them for AML purposes. So what happens then? Business A goes to another bank in a country and they bank there. But because this is a professional money laundering operation, the money launderers are not deterred by this. In fact, what they do is a classic thing that we've observed a number of times, which is called a phoenix operation. So like the mythical bird that rises from the ashes, these directors decide that they're going to set up some different companies to continue the laundering operation. So in this case, they go over to an Asian nation and they set up 2 new businesses. And as you can see here, right, in both of those businesses' corporate registry records, these directors are mentioned. So again, smart money launderer, they've moved from Africa to Asia. They think that by doing this, they'll fall through the gaps of the siloed approaches that organizations have taken. But with entity resolution, we can create this single view of customer, and we can actually use information to link them together and say that actually this business that you used to have in Africa is the same as these 2 businesses that you have within this Asian nation. And actually, they link on the same address as well, which increases the suspicion. What happens next is that we see the business that used to be a customer come back as a counterparty to these 2 new businesses that are set up in Asia. And also, the businesses that they used to transact with around the world also come back as counterparties. And all of this money is essentially flowing from these nations into this Asian country as a bit of a funneling operation. So this is where they're starting up the layering operation again that they had. And at the end of it, they are repatriating those funds as standard 103 messages to different countries in Europe. And when we look at this one, right, so this again shows you the collusive nature, right, the counterparties that they were dealing with, the Phoenix operation, they're all connected, right? We couldn't pick out all the connections to reference information, but the transactional activity and the kind of multi-year look back really pieced this together quite nicely. What we think was happening is that the country where business A was residing had currency controls in place. So they were using letters of credit as a way to circumvent them. And basically they were importing, in inverted commas, goods that were allowed, which allowed funds to be funneled out of the country. When we looked at the paperwork here as well, it was immaculate, right? So there were no spelling mistakes. Everything was documented, quantity, price, everything lining up to what you'd expect for this business to be doing. So they'd learned how to basically bribe the officials at the custom port and the other things to get the money out. And it was a slick operation. And as you can see here, right, the complexity within this and the scale is of hundreds of millions of dollars. So that's one of the most complex areas. And again, you really do need entities and networks to piece this together. You couldn't draw this up by hand or pull this together with a human process.
No, this is a great example. I love this one. And, again, this is what would take teams like I used to manage weeks and weeks and weeks, if at all, able to really kind of pull these things together, as you mentioned, with the kinds of tools that we were often equipped with. These things went unnoticed, and we could find certain things, but to really unravel these kinds of complex organizations were extremely difficult. So for me, it's just fascinating to see where technology has really taken us in the ability to unravel some of these more complex types of organizations. We've given some good examples, I think, around AML, and certainly the AML type risk that we've highlighted are things that institutions, should be aware of, need to be aware of, need to protect themselves and their customers. But just as important, and sometimes of equal concern, can be around some of the fraud examples. And there have been some, recently that have come to light that have really, I think, highlighted the fraud risk that takes place in the global world of trade finance. Hinlong, for example, Vincenten are just 2 examples of large fraud operations that, again, highlighted the types of risks. I guess the question would be, maybe for our audience, is can these same techniques around resolving entities against internal and external data, leveraging the network views and those things, can they help with fraud equally as well as AML?
Yes, they can, Clark. So let's segue into a kind of nice trade finance fraud case that we picked up, again, using the same techniques for AML, but adjusted scores and sensitivities. If it's of interest for the audience, we do actually have a forensic view of the Hinlong case study. This is not it, by the way, but you can contact us at the end if you'd like us to delve into kind of the key indicators and markers from what we've seen across a number of projects around Hinlong. So this case, it's a different case. It's trade finance fraud. And essentially, right, this is the internal representation of a particular business entity. It's fairly large. It's involved in steel manufacturing. And as you can see, customer A is the parent of customers B and C, both on the books of the bank. Here are the internal trade accounts. We can again see some addresses in India and some corporate registries matching that information. The activity that we see doesn't look too circumspect on first inspection. What we see is that actually from one of the accounts of the parent company, customer A, we've got some fairly large trades to certain steel businesses in Nigeria. And as we can see, there's quite a Nigerian access to this. So this business called Nigeria B and Nigeria C. From customer B, we also see some transactional activity, again, to the same counterparties. That is a little bit suspicious, but not the thing that trips the scores in entirety. But again, right, you can see here millions of dollars worth of finance trade between these three entities. And also the third part is also trading with the same three counterparties. So we would consider this to be quite concentrated and something that would be worthy of looking at, but it is steel, right? So there are only a few businesses that operate in steel. It's quite specialized, right? Especially in the manufacturing and fabrication stages. But the most interesting things happened when we used entity resolution across this picture to bring in the corporate registry information. So in this case, when we looked at the Nigerian business C, its corporate registry led up to being a subsidiary actually of customer C. So again, you can see, right, the size of some of these are, and that link is very interesting. And actually, as we started to blend the corporate registry information across this network, a really unusual pattern emerged. The Nigerian company A was a subsidiary of customer B. And actually over here, right, it wasn't a subsidiary, but the director that was linked to both the parent and customer B is mentioned on the corporate registry record of Nigerian company B. So we couldn't find a link between Nigerian B directly to the ownership structure of the company at the bank, but we found one indirectly through the directorships. And as I mentioned earlier, trade finance was really created because there's a lack of trust, right, between the importer and the exporter, and it costs money to guarantee the payments. That's why the banks are involved. So to see this amount of trade financed within the same corporate hierarchy is a clear indication of fraud. And potentially what they're doing is they're circulating these trades between them, right, to basically mask some credit losses somewhere else within the business. But essentially, right, there could be, I think there's probably 50 million plus, right, on this broader network. If this steel company was to collapse, then obviously, a bank or several banks would be left with the burden of satisfying that particular loss. And again, this is a prime example of where using third-party data and combining it with the internal data of the bank's transactions and piecing it together in a network, all these trades within social networks and the size and scale of it is incredibly unusual and definitely worth a look from an investigator within the bank. Thank you, Clark.
Yeah, thanks, Alexon. Again, great example, and one that really highlights how complex some of these things can be, and having the right tools can really make a huge difference. We've talked mostly in these examples about the businesses involved, right? Either our customer or counterparty, and look through corporate registry data. But in reality, there's a much bigger ecosystem, right? When we talk about trade finance, you get all of the other players in the deals between brokers and attorneys and different other players within this. So if we look at the broader ecosystem, I think we recognize that there are other kinds of activities. There's a lot of focus on ESG right now. And so there are other kinds of behavior besides what we've talked about so far that might come up as a concern or a risk. Can you kind of walk us through an example of what some of those other types of risks might be?
Yeah, thank you, Clark. So yeah, ESG, environmental, social, corporate governance, is obviously top of the agenda for many organizations. And this is touching things around modern day slavery, wildlife, organ trafficking, and things like that. And actually, it might not be your customer that's involved with these. So case studies in 5 and 6 in this example are actually linked to logistics companies. So they are part and parcel of the delivery of the goods. But here we're seeing that some of these logistics companies have got some significant issues. So the first example here, it's a case of wildlife smuggling, and it's actually pangolin in this example. So what we have done is we've used data from a company called Liberty Shared. So they provide aggregated information of human trafficking, wildlife, and organ. And essentially, we're using exactly the same approach that we would, but replace a kind of traditional watch list like WorldCheck or Dow Jones with Liberty. And we're seeing what they match against in the data. And in this example here, you can see Liberty data, which is this one, and that's a rhino horn, matching against a Dun & Bradstreet record, and the company flag, the country flag there is Vietnam. This is actually a logistics company. These are subsidiaries of that logistics company, and it's quite big, right? You can see over here 205 businesses of the main parent. So actually, right, this is the Liberty record here is registered against the parent. So the question is it just a few bad individuals within this company that have been involved? Or actually, is this something that's more widespread and pernicious against a broader range of that company? But this is an example, right? This is a wildlife trafficking risk against the logistics company. Now, this company may be a customer of yours. It may be involved in some of the trades, right, as the delivery mechanism. But again, we can highlight things not just on the kind of more traditional companies, but actually the supporting ecosystem of logistics companies, agents, etc., and alert you to risks that they might present to you. So this one was quite a simple one, right? This shows wildlife trafficking against a logistics company. The second one is also a logistics company, but it's a much more complex and serious case. And as you can see here, right, there's lots of stuff that flashes up in red. In the middle here is the Liberty document that says, again, wildlife trafficking for this individual named in Liberty, this one here, and the business. But when we bring in the Dow Jones watch list, this actually corroborates all of this information over here, but also then links to a couple of OFAC issues with both an individual and with the business. And also we can see some links to ICIJ on here as well. So this kind of shows you that actually some of these things do overlap, right? You've got some wildlife linked with some OFAC sanctioned entities of both individuals and businesses and ICIJ. So this is a great example of where we've collated all of that information together with entity resolution. I think we've got every data source here. We've got watch lists, we've got Liberty, we've got a corporate registry, we've got ICIJ. The only thing we're missing is some customer data. But this kind of gives you an example of how associations can quickly form, and actually something that could be well, it's risky, it's wildlife crime, but actually is connected to some things that are a lot more serious within the data.
Yeah, great example. It's in the global world in which we all operate today, and the ability to bring data across geographies, across disparate data sources, to really help paint a picture and understand the connections to truly assess and understand risk has been a game changer. So really appreciate the opportunity to go through all those examples. We're out of time. Hopefully we've done an adequate job of demonstrating technology. While it may not be the answer to every problem, technology is here to help. Technology has really advanced over the last several years, and it has really brought us to a point where some of the traditional challenges and struggles that institutions have had or continue to have can really begin to be addressed in a more effective and efficient manner as we all work to try to better understand the risk in which we're operating today. We've gone through today things like circular money flows and PEP connections and risks, sanctions, the bridges between AML and fraud, the involvement of organized crime, and then even beyond some of those things into other ESG or non-traditional types of criminal activity. So a good broad array of examples that hopefully demonstrate the value of exactly what entity resolution and then building context through network analytics can really do. It truly has become a game changer. So again, thank you, Alexon, for walking us through the examples. Thank you to everybody for spending your time with us today. If you've got questions, our contact information is here on the slide. Be more than happy to discuss with you and answer any questions you might have. Thanks again. Best of luck, everyone.